We're going to be introducing,
That's the right word.
Is it?
Introducing.
Interviewing.
It's a lot of N's.
We're going to be interviewing Mark Ingham. He's like super clever, very clever. He wears funky socks.
The best socks.
And shirts. Watch his shirt. It's very
crazy.
But we need to put our clever hats on.
Smarty pants.
And look all formal. I've even got my formal shirt on today.
I'm wearing a cardigan.
And so we're going to check how this goes. It's our first one, so bear with us. Give us feedback.
Be gentle.
And let's make it easy for you.
Yeah, that's our whole thing. I'm Carly Barnes from EasyEquities, Team Easy, and I'm here with Kurt Solomon, also from Team Easy.
Yes, how's it going?
Team, some might say. And we're here with Mark Ingham, who's an incredibly smart guy, and he does a bunch of fundamental analysis and a lot of research pieces for us, which you may or may not have seen on our website. So we've got lots to talk about today, and we thought we'd just have a bit of a coffee and a chat. Thanks for being here, Mark.
Yeah, good to join you, Carly and Kurt, and hello to everybody out there.
Hello.
Thank you. Maybe just to start, Mark sent out an awesome piece entitled Gold Stocks in the Brexit Storm, which is fascinating. And as Carly said, we're going to be chatting about at Brexit and obviously what that's got to do with the gold price.
So Brexit was Britain leaving the EU to kind of have its own thing. And how much of a crazy impact was that on our world and the markets and life in general? In your opinion, was that that was a big deal, right?
It probably was, because the markets hadn't priced it in. The markets tend to react first, and they tend to overreact.
Sure.
And that's why we're actually chatting about gold today, because gold has overreacted, but positively so on the upside.
Sure, the stocks have been all over the place, but gold's kind of been up there still and maintaining.
Yeah, we've seen quite a lot of money wiped off global stock markets because there's fear of the unknown, I think. But gold tends to reassert itself at times like this. So we saw gold, up to $1,330 an ounce nearly. It's come back a bit today, but we started the year at just over $1,000 an ounce. And the stocks that we're featuring today, which include Harmony and Sibanye, are two stocks that are South African-focused gold companies, which give you some interesting upside in the event of the currency weakening and the gold price strengthening, but equally they're sensitive to the inverse as well.
Sure. So both are obviously gold, but as an investor in Sibanye versus Harmony, what would that mean for the investor? Long-term, short-term?
Well, we saw Sibanye and Harmony react very positively last Friday. Gold was up and the currency had weakened slightly. But they're incredibly sensitive to fairly small moves. Just one example, Harmony, for instance, a 1% move in the rand-dollar exchange rate or the price of gold has a 3% impact on operating profits if that prevailed for a full year. That shows you how sensitive it is. Sibanye is less sensitive to these movements, largely because its operating cost structure is lower. So all things being equal, if we were with the current situation for a full year, you could make a case for Harmony being a fair value in the stock market at about 90 rand, whereas at the moment it's about 50 rand. Sibanye, for instance, I've got a fair value on the stock of 39 rand based on my forecast, but that's predicated on about 1200 on gold and a slightly stronger exchange rate. And
Sibanye paying the dividend, of course.
Plus a dividend. So
we like those.
Yes,
we enjoy
like
dividends.
It's one of the few mining companies that has a fairly predictable sort of dividend, and it typically pays out 25 to 35% of its earnings. So I think people watching this just need to realise that there is a value continuum, with a weaker gold price at a stronger rand.
Mm-hmm.
Sibanye is probably better value, closer to 40, but in the current situation, closer to 60. Harmony, at these current levels, at around about 50 rand a share, offering pretty good value for money. But if this current situation prevails and we do get a situation where the world is in a economic crisis again,
A palaver.
Following on from Brexit, who knows?
Brexit, that's the thing. Hashtag Brexit's all over the place at the moment.
Then Harmony is going to be your friend, whereas everything else is being
Makes
slaughtered. A stock like Harmony will be doing extremely well.
And I just kind of want to take what you said and break it down a little, just for some of the users and maybe me, who might not know all the terms that you're speaking about. Could you explain what something like fair value, what is that exactly?
Okay. Well, you'll see with the viewers, when they read the note, they'll see there's some detailed financials there, and there's 3-year forecasts as well, and it just unpacks what the gold production will be, what their cost of production will be, what their net debt or net cash position will be, and what the earnings position will be as well. And then what a financial analyst would do is crunch those numbers together, and you'd arrive at a net present value based on a discount rate, and that present value would be a function of the assumptions that you use.
So there's a bunch of different variables, and you're kind of drawing on what you know and your kind of experience and going, if this set of variables happens, then the fair value will be this.
Correct.
But those variables could change in a number of different ways.
It's a sort of continuum. It's frankly, how long is a piece of string?
Time, space, continuum.
You've got an easy job then, Mark. You've got an easy job. Obviously, also with the gold price and the an exchange price, that's two big factors. The management team, though, on both Harmony and Sibanye, solid and sound as well. I mean, that plays a factor too.
Absolutely. Good people make for good company.
Sure.
And that's why Purple's a good company.
Yeah.
So both seasoned management teams, excellent sort of geologists, mining engineers. These people know what they're doing. Harmony is expanding and investing in Papua New Guinea, and that investment, that project that they're working on will only start to benefit earnings in about 2020, however. So in the meantime, they're having to invest ahead of those profits coming. So Sibanye is diversifying too. It's diversified into platinum. It's going to diversify into energy assets. It's a thoroughly modern mining company and doing things differently to the sort of traditional mining house that we would associate with a Anglo-American, for instance. So both good quality companies, and I think if we had to wrap it up and say, well, between the two, I think for perhaps the longer term investor, provided you get your timing right on entry into the stock, sort of Sibanye, I think, is a better longer term play. And the fact that it pays dividends also underscores the fact. And then I think Harmony, as I say, given the fact that it's investing in new assets, and that's sort of consuming cash at the moment, and the fact that it's got a slightly higher cost of production, from a trading point of view, Harmony probably is one that the seasoned trader who likes a little bit of volatility in their lives.
A little bit of
that's probably the one to go for relative to Sibanye, which has perhaps a more stable earnings platform as we sit here today.
Obviously, the long-term portfolios for both Sibanye and Harmony are looking good and solid, and the main factors to that, as Mark said, were the dollar price, the dollar exchange rather, the gold price, and of course the management team, which is pretty cool.
I really underestimated that brain of yours. You asked very good questions and remembered all of that.
I just try, Carly. You know me, I'm putting on my clever hat today.
Right, so I think we'll leave it there. If there's nothing else to add, that's us in a nutshell. But we'll be doing a few more of these things and bringing you some interesting insights. Go and check out the blog. Go and check out Mark's note. Super interesting. And help you maybe make some of those investment choices.